Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, May 4th, 2011 is sponsored by Realtik. Alright, folks, let's get into the hardcore analysis today. A wild down day on Wall Street. The Dow Jones Industrial Average is down 120 points on the day. NASDAQ is down 28 points, and the S&P 500 is down 13 points. Now, that is 1% across the board. We're now seeing the master top in on this market in the short term. What do we mean by that? Well, if you go back to last week, folks, and we're going back about 1 week into late April, I made a call when we were trading right around this area. On the 26th, 27th, 28th, I said, guys, the target of this market, the area this market is going to, is the 137.10 level. And again, we have this archived for all of our members. We gave this call out ahead of time, as you can see, going back to these dates. And the key was to recognize that the market was going to this level. Why was 137.10 a master level? Because if you go back in the charts, you will find, based on the methodology here at In the Money Stocks, that that is the signal of a short-term top in the markets. And that is where the market was going to go. That is where the market was going to reverse. And that is where you wanted to short this market. Sure enough, Monday comes. What happens? Everyone's jubilant over the Osama bin Laden killing. We see the markets gapping up. Where did they gap up to? Precisely 137.10. Literally to the penny we're talking about here, guys. Sure enough, this line represents it. You can see initially we got the pullback off of that level. The markets retested it, tried to break out. They failed miserably, and that was the top of this market. And again, we gave you this level literally 1 week ago that the market was going to go here. And at that level, we said short this market. You will make money on the downside. Short oil stocks, short this, short that, go long the volatility index. I myself am holding the SDS long with my members in the research center and chat room. We're making money on that across the board. And again, there's your top. Look at the market since then. A 3-day consecutive fall here from that pivot top. And how many people out there can say they nailed the top on this market here? Again, you're making money hand over fist here at In the Money Stocks. Even if you've never tried us, take the 1-week free trial of the research center and the chat room. It's free. Free is for me, right? All right, in any case, the market as it collapses down here, we hit some key levels, we bounce, but ultimately it is going lower right now. We are making a little in spirit of bear flag down here. You can see it. We have a couple tails pointing to the downside, which tells me as the volume gets lighter this afternoon, we may see the markets see a little bit more upside, just maybe up to that 20 moving average or slightly above. Overall, why did the market sell off today? Well, number one, I think the market is beginning to worry about QE2 ending. Folks, we're looking at economic data. I talked about this last week. Jobless claims coming in back over 400,000 at 425,000 last week. GDP 1.8%. This is all while we're having a massive amount, literally trillions of dollars being pumped into this market by the Federal Reserve. Okay, that's $600 billion in QE2. There's also obviously other measures there they've been taking over the last couple of years. The market should not be stalling out. The economy should not be stalling here. Granted, we got ADP private sector jobs numbers this morning, which were decent, but they weren't anything to write home about. Nothing at all. Earnings have been good, but we actually had some earnings over the last day or so that weren't that great. That's making people worry as well. Commodity prices have come in. That's also hurting the market. How does commodity prices, how do they hurt the market? Well, the way they hurt the market, if you go to the USO here, and you can see it's down 78 cents, if the USO, which is the representative ETF of oil, is down, stocks like Chevron and Exxon are going to be down. Chevron and Exxon are key components of the Dow Jones Industrial Average. They're major components. If those stocks are down, chances are they're going to drag down the index. All right, you can take a look at any oil stocks overall. ConocoPhillips is down $1.44 today. That's had an ugly fall the last couple days. Marathon Oil's being crushed as well. That's getting hit the last couple days, although a nice little double bottom right down here. I have to say, though, I think oil stocks in the short term may be near a bottom, if not at a bottom. Looking at the OIH, take a look at this, guys. I gave this call out in the chat room today. It was an amazing call. Take your pivot low right here and drag it across. That's your pivot low. I think you have a short-term bottom on the OIH for maybe a 1 or 2 day bounce here off of this 149.50 level. And I gave that out as a scalp. We made about 50 to 60 cents on it in the intraday stock chat on a beautiful trade right there. And again, all you have to do is take the free trial of the chat, and you're getting these calls live while you're watching our live charts in the intraday stock chat. All right, so that's what's going on here across the board. The dollar is slightly lower, but it is off the lows. What we're seeing here is a very peculiar situation over the last 3 to 4 days. What we've seen with the dollar, and you can see it right here, folks, on the daily chart. Let me zoom in a little bit more. We're seeing the dollar early in the day push down. That's why you get these tails. And then by the end of the day, the dollar moves back up. The same thing has happened 3 days in a row, and today it's happening again. We made lows very early on in the day, and now you have a green candle. It's not like we're making a move up yet on the dollar, but you're not being allowed to fall anymore here. The dollar definitely has some support down here, and we need to continue to follow this very, very closely. An up dollar should mean more selling in the markets if that continues. If we see the dollar start to make a move up, we should see the markets go a little bit lower. Okay? So we're going to keep a close eye on that. And again, I have to find it fascinating the fact that the dollar has really just gone sideways for 4 days. And the markets, if you look at the markets on the SPY, the markets have actually fallen. And that's a very interesting change in character recently to see the markets going down even when the dollar is going sideways. Usually dollar sideways, market sideways. But right now we're seeing clearly that if the dollar is not falling, the markets cannot get a bid. They cannot move to the upside. All right, let's go over a couple intraday charts. You can see the market's continuing to get a little bit of a bounce off the lows here. But either way, those of you that shorted with me over the last week or so are doing very, very well on our shorts, and that's what you want to continue with. Whether it's shorting Chevron, whether it's shorting Exxon, whether it's shorting the market using SDS going long, these are all working out. VXX was another call I made out to members saying VXX should get a nice solid bid. The VXX from the low here, look at this move on the VXX. Wouldn't you have liked to have gotten it right here when the SPY was at 137.10? That's where it was, folks. Literally, here's your Monday, and the VXX was at 22.95. VXX hit a high of 25.48 today. You're talking about a monstrous $2 and basically $2.50 move on the VXX off the lows in 3 days. That's over 10%, folks, over 10%. All right. Now, again, what we want to do is kind of take a look at a couple other things here. Chevron, let's look at it. Chevron, I made a gutsy call last Thursday, and the article's actually on the blog, and I talked about it in the nightly videos to the Research Center members. I said, listen, Chevron, Exxon, you can short them. In fact, there was a triggered about a week ago on Chevron at 107.75 on a short on Chevron, saying the reason behind it was here because of gap fill right up here. And it was above it for a little bit, but as you can see, it's coming beautifully down now, and people are very much in the money. In fact, I gave the alert to sell at least, or cover at least half of the short there for some good profits, and then hold the rest. The rest should make a target move down to about this level in the short term, right around 103. In any case, the reason was because it didn't matter what oil was going to do. If oil went up, the markets were going to sell. Why? Because oil is going to hurt demand. It's going to hurt the economy. It's going to hurt the consumer spending. Therefore, you were going to see a decline in oil stocks with the market as the market pulled back. If oil came down, we were going to see oil stocks selling off anyways. It was a no-win situation. So I called a sell last Thursday on oil stocks. Look at the sell-off here we've had. Here's your Thursday candle, right? Here's going back to Thursday. Thursday, Friday right here. Look at the sell-off. ExxonMobil, same thing. That's another one. Look at the fall here. Bam, to the downside. These are unbelievable moves. We've seen a $4 drop on Exxon in 3 days. You don't really see Exxon move that much to the downside very often. Take a look at ConocoPhillips. Look at this collapse on ConocoPhillips. It's been a dramatic fall there. MRO, you name it. They're all falling to the downside. Schlumberger, take a look at Schlumberger the last 3 days. Oil stocks getting crushed. You got to know how to read the charts. You got to be able to extrapolate ideas and put two and two together. And that's what we're here for. That's what In the Money Stocks is here to do, is guide you through the markets. Make sure you understand the ins and the outs. Make sure you are profiting on the markets and learning the ways that you need to be to ensure profits are staying in your pocket and you're not giving them back. Too many people out there, trust me. I can tell you this right now. Like on the silver trade. Silver trade, way too many people. And wow, look at this, guys. 38.01 is a buy on SLV. I love SLV here. SLV long here, SLV. In fact, look back in about a day or so. You'll see this at least $1 higher. I'll make the call right now. $38 I gave to the chat room as a buy area on SLV. That is your buy area, okay? And again, we'll check back in a couple days, but I bet you this is $1 to $2 higher. I'm making that call right now. All right, enough said. Join the Research Center. Join the chat room. Let's make some money.